Ever wondered how people invest in the stock market? It's not just about buying stocks. The world of investments is rich and diverse, offering tons of ways to grow your money. Let's dive into the most common types. First up, the classic. When I buy a stock, I'm actually buying a small piece of ownership in a company. This makes me a shareholder. But here's something that trips people up. Not all stocks are the same. There are two main types. And common shares are what most people think of when they hear stocks. They usually come with voting rights at shareholder meetings, so I get a say in major company decisions. Plus, if the company does well, the price of my shares can go up, and I might receive dividends, which are a share of the profits. Preferred shares, on the other hand, are a bit different. They usually don't let me vote on company matters, but they give me priority when it comes to dividends, meaning I get paid before common shareholders if the company hands out profits. And if the company ever runs into trouble and has to liquidate, preferred shareholders get paid out before common shareholders. So why would I pick one over the other? If I want to say in the company's direction and I'm comfortable with more risk for the chance of higher long-term gains, I'd go with common shares. But if I prefer steady income and a bit more security, preferred shares might be a better fit. Both can fit into a solid investing strategy, it just depends on what I'm looking for. Next, think of bonds as an IOU. When I buy a bond, I'm lending money to a government or a company. They promise to pay me back the original amount, plus regular interest payments over a set period. Bonds are generally less risky than stocks and can provide a steady income stream. Looking for diversification without picking individual stocks? Enter. These are professionally managed portfolios that pool money from many investors to buy a wide variety of stocks, bonds, or other securities. This diversification helps spread out risk, and I benefit from the fund manager's expertise. Similar to mutual funds, but with a twist, are exchange-traded funds. Like stocks, ETFs trade on exchanges throughout the day, so their price can change constantly. They often track a specific index, sector, or commodity, giving me diversification and flexibility, usually with lower fees. Now for something a bit more advanced. An option is a contract that gives me the but not the to buy or sell an asset at a specific price by a certain date. Options can be used for speculation or to hedge other investments, but they're complex and carry significant risk due to their time-sensitive nature and leverage. Within options there are: a call option gives me the right to an underlying asset at a set price before a certain date. I'll buy a call if I think the price is going up. Then there are: a put option gives me the right to an asset at a set price before a certain date. I'll buy a put if I think prices are going down or to protect myself if I already own the asset. Finally, these are legally binding agreements to buy or sell a specific asset like oil or gold at a predetermined price on a future date. Futures are highly leveraged and can swing wildly, so they're mostly for experienced investors. So whether I'm looking for long-term growth with stocks, steady income with bonds, diversified portfolios with mutual funds or ETFs, or even advanced strategies with options and futures, the stock market has something for everyone. Remember, every investment comes with its own set of risks and rewards. It's crucial to understand my financial goals and risk tolerance before diving in. Do your research, consider consulting a financial advisor, and invest wisely. If you liked this video, give us a thumbs up and subscribe for more investment insights. And tell me in the comments, what do you want to invest in?